Hello all my dear students, I hope you all are doing good. So today we are going to start with the discussion of a very important topic for your exams. One of the most important topic you can safely say for your exams, and that is taxation of virtual digital asset, which is absolutely a new amendment made by Finance Act 2022. Till last year, that is till 21-22. There was no clarity about how a virtual digital asset like cryptocurrency and all should be taxed. Now the government has came up with a complete solution on how to tax a cryptocurrency, how to tax an NFT, that is non-fungible token, so on and so forth. How to tax these things. The government has come up with a complete solution. First of all, you need to understand that the government has first of all defined what is cryptocurrency, what is virtual digital assets. First of all, the government has given the definition of what the virtual digital assets. Then the government has also given the taxability of virtual digital assets. The taxability is given in section 115 BBH. And then the government has also given the TDS implication with respect to virtual digital asset, which is given under section 194S. So we have to see all of them, and then later on there were a lot of doubts with respect to this. So the government has clarified that doubt through a CBDT circular. CBDT has given a long notification in the form of various FAQs, and those FAQs are trying to address what questions which can come to our mind. So you have to be very careful. It's a very important discussion for your exam. Be very careful about it. All of you, please pay attention. The first thing which we need to understand over here is the definition of virtual digital asset. What does virtual digital asset includes? Let's see. There are two things which the government has included in the definition of virtual digital asset. Now this chapter is there in your book 1. Chapter number 29, book 1. Okay. So come to chapter number 29 in your book 1. It's not there in book 2. It's there in book 1. Section 247A is the definition of virtual digital asset, and they have included two things in that. Virtual digital asset includes means what? First of all, any cryptocurrency like Bitcoin and all. And second is NFT, like non-fungible token. You might be knowing that there is something called as NFT, which is very popular in today's world. So I will not get into the explanation of what is NFT, but there are a lot of celebrities who sell their non-fungible token. So you can say that I have the rights of that celebrity. For example, Amitabh Bachchan has come up with his NFT, and it has been sold for lakhs of rupees. Like Mahendra Singh Dhoni is also coming with his NFT, and many other celebrities across the world are coming with an NFT. And NFT gives you what? Right over that particular celebrity. So you have the right of that celebrity. That is also an intangible asset. It's a kind of intangible asset. It's a kind of virtual asset. And the government then the third case has said that they can include any other digital assets as may be notified by central government. Okay. They can include any other notified asset as the central government may notify. Further, they have said that the central government also has the power to exclude any digital asset from the definition of virtual digital asset, and they will be also coming with a notification to exclude any digital asset. And what I feel personally is they have put this provision only because of one reason. That is my personal perception. The reason why they have put this provision is because they want to exclude the crypto, which RBI will come up later on. So they want to exclude that crypto from here. So RBI has announced that they will be coming with their own cryptocurrencies. So far it has not been launched. So far it is not yet available in public place, public forum. But RBI has announced that they are going to come up with their own cryptocurrency. So I personally feel that this exclusion might be for that particular crypto only, which RBI is going to come up. RBI wants to encourage their own cryptocurrency. Therefore, they want to keep this own cryptocurrency out of the scope of what? The taxability. Or they might give some relaxed taxation to that. Okay. So this is the first thing that you have to keep it in mind. What is the definition of virtual digital asset? So virtual digital asset will mean what? First of all, it means cryptocurrency. Second, NFT, non-fungible token. Third, any other asset, any other digital asset as the government may notify later on. So far, they have not notified anything. And the fourth and the last point is they can exclude, if the government wants, they can bring a notification to exclude any digital asset from the definition of virtual digital asset. We are presuming that when the RBI's cryptocurrency will come, they will try to exclude that cryptocurrency from the definition of virtual digital asset to give relaxation to RBI cryptocurrency over Bitcoin and other kind of currencies. Okay. So now let's come to the taxability, the second part of this particular section, this particular discussion. This is something which we have done. Now let's come to this one, 115 BBH. What is 115 BBH? 115 BBH talks about taxability. The first thing which we need to address over here, what will be the nature of income of virtual digital asset? I have a cryptocurrency. If I sell that cryptocurrency and if I earn some profit out of the sale, okay, now what will be the nature of that? Will that be considered as a capital gains or will that be considered as a business income? So that depends. The law has not mentioned about the nature of capital, nature of gain. I have a cryptocurrency. I am selling that cryptocurrency. With that sale, I am getting some profit. That profit, whether that profit will be considered to be a capital gains or PGBP, that depends. That depends upon the facts and circumstances of every case. By default, it will be a capital gains. But if you are regularly trading in the cryptocurrency, then it can be called as PGBP or income also. That's what it is written over here. Check. Cryptocurrency or NFT may be deemed as capital assets if they acquired for the purpose of investments. In such case, any gain arising on transfer of such assets shall be taxable under the head capital gains. If, however, such transactions are substantial and or if such assets are held for trading purpose, income from sale or purchase of virtual digital assets may be taxed as what? As business income. So, income from transfer of a virtual digital asset, it may be taxed in capital gains, it may be taxed in PGBP. That depends. If it is purchased in the form of an investment, then capital gains. If it is purchased for trading purpose, then PGBP. Now, nevertheless, it doesn't matter whether it is PGBP or capital gains. In either of the case, it will be taxable at 30%. The way lottery is taxed, the way winning from horse race is taxed, plus surcharge if applicable, plus health and education cess. Irrespective of whether it is capital gains or PGBP, irrespective of whether it is long-term capital gain or short-term capital gain or PGBP, check here. The tax rate is same whether it is business income, whether it is short-term capital gains or whether it is long-term capital gains. It doesn't matter only. It doesn't matter only. You are not going to be taxed at a different rate for different income. Every income will be taxed at 30%. It doesn't matter to you whether it is a capital gains or whether it is a PGBP or whether it is what? Whether it is a business income. It doesn't matter. Okay. It is one and the same thing. Okay. Now, there are some important points which we have to keep it in our mind. First of all, no deduction of any expenditure will be allowed. Nothing will be allowed other than the cost of acquisition. Only cost of acquisition will be allowed. Apart from that, nothing will be allowed to you. No deduction of any expenditure. Nothing will be allowed. For example, if you have bought Bitcoin, say you purchased Bitcoin for 100 rupees and then you sold for 250 rupees. That is a very straight calculation you are supposed to make. Selling price 250 minus cost of acquisition 100. 150 rupees tax at how much? 30%. That's it. Matter close. No deduction of any expense. No deduction of any loss. No deduction of any setup of loss, any expense, any allowance. Nothing will be allowed against this. This is flat taxable at 30%. Suppose if there is a loss, suppose if there is a loss, you purchased at 250 and sold at 100. So there is a loss of 150, right? This loss cannot be set off. Cannot be set off against any income. It cannot be set off against any income. It cannot be set off against this income also. Not allowed. This loss is lapsed forever. If there is a loss on transfer of a virtual digital asset, that loss is lapsed forever. That will not be allowed to be carried forward and set off against any income. You will not be allowed to carry forward and set off that loss for any income. Okay. You will not be allowed to do that. Check that. Be very careful. Loss arising on transfer cannot be adjusted against any other income. Not allowed. Any loss incurred by SSE from transaction cannot be adjusted against income from virtual digital asset also. If there is a loss on transfer of a cryptocurrency, that loss cannot be set off against other income also. That loss cannot be set off against the income of what? Transfer of virtual digital asset also. That loss is lapsed. Forget about that loss. So very dangerous taxability. Very, very, very dangerous taxability. The taxability is very straightforward. Tax rate 30%. The surcharge if applicable, and cess. And cess will be applicable always. How to compute? Very simple. Sale minus cost. That's it. This is the only deduction which is available. Nothing else. If this is profit, pay 30% tax. If this is loss, tax. Cannot be set off against any other income. Cannot be set off against the income from transfer of virtual digital asset also. Cannot be set off against the gain of cryptocurrency also. This is lapsed forever. Okay. Now, the government has also put the implication of TDS. TDS has to be deducted. So, who will deduct TDS? When TDS has to be deducted? What is the timing of TDS? What is the rate of TDS? What is the threshold of TDS? We need to see all of that. Okay. So, any person who is responsible for tax deduction under 194S, who is the deductor? A person responsible for payment to any resident. So, TDS has to be deducted when you make payment to only residents. If you make payment to non-resident, you will deduct TDS under section 195, not here. If you make the payment to resident, you will deduct the TDS. Who will deduct the TDS? Obviously, the buyer will deduct the TDS because buyer is making the payment to the seller. Okay. Who is the deductee? As I have told you, the deductee has to be resident. The deductee has to be resident. Resident. So, who will deduct TDS? Let's see that. Buyer, seller. Buyer, while making the payment or credit, whichever is earlier, deduct TDS. Seller has to be resident, please. If the seller is non-resident, then go to 195. Cannot come here. Okay. Be careful. Next question is, what is the timing of TDS? That same, credit or payment, whichever is earlier, traditional provision. The way we traditionally deduct TDS, in the same way we have to deduct TDS here also. Okay. Now this threshold is very important. This is slightly different kind of threshold. When should we deduct TDS? On every transaction are we supposed to deduct TDS? Suppose if I am buying one cryptocurrency of 100 rupees, am I supposed to deduct TDS? The answer is no. The government has kept two thresholds. The consideration is payable by specified person. Then the threshold is 50,000 rupees. And by any other person other than specified person, the threshold is 10,000 rupees. So if the buyer is a specified person, then the consideration should exceed 50,000 rupees. If the buyer is non-specified person, then the consideration is slightly lesser, 10,000 rupees. Then it has to deduct TDS. Okay. So here It is talking about whom? The buyer. It's talking about whom? The buyer. Now you will ask, who is a specified person? The government has defined the term specified person means a person being an individual or HUF. If his total sale, gross receipt, gross turnover does not exceed 1 crore rupees. If it is doing business or if it is doing profession, it does not exceed 50 lakhs in the immediately preceding financial and with the virtual digital asset is transferred. Do you remember that? This is a similar point which was there in 194A, 194C, 194H, 194I, 194J. Do you remember that? So here also, if the buyer is individual HUF and if the last year's turnover is less than 1 crore or if the last year's profession turnover is less than 50 lakhs, then I will get a threshold of 50,000. And if the last year's turnover or threshold is greater than 1 crore or 50 lakhs, then I will get the threshold of 10,000 rupees. So here what has to be seen? Please pay attention. Here the buyer. If he is a specified person, when he will become a specified person? When the last year's turnover is less than 1 crore or less than 50 lakhs. Then he becomes specified person. And this is only applicable to individual HUF. So, if he is a specified person, then the threshold is greater than 50,000 rupees. When he will become non-specified person? He will become non-specified person in two cases. In case of individual HUF, if last year's turnover is greater than 1 crore or greater than 50 lakhs and or it is other than individual, then always. Because this relaxation of 50,000 is only for individuals and HUFs, not for everyone. We have to check the buyer. If the buyer is a small buyer, individual HUF, last year's turnover is less than 50 lakhs, 1 crore, then the threshold is higher, 50,000. Up to 50,000, no need to deduct TDS. But if the assessee is an individual HUF as a big buyer, last year's turnover is greater than 1 crore or greater than 50 lakhs, as the case may be for business or profession, or if the assessee is a company or is a firm, then so this question is not applicable only. Then in these two cases, always the threshold is going to be how much? It has to be greater than 10,000 rupees. Okay, you can take a photograph of this if you want. This will help you all to understand in a better way. You have to check the status of the buyers. If the buyer last year, if the buyer is first of all individual HUF. If the buyer is company, then by default it is 10,000. 50,000 is only for individual HUF. That too if the last year's turnover is less than 1 crore or less than 50 lakhs. Or it is up to 1 crore, up to 50 lakhs you can say. Okay. Now what is the percentage of TDS? The percentage of TDS is very simple, 1%. Okay. 1% is the TDS. Okay. 1% of the consideration for transfer of virtual digital asset. TDS rate is 1%, and when you make the payment to resident, obviously this section is only applicable when the recipient is what? Resident. So obviously for resident we do not include surcharge and cess while deducting TDS. It is flat 1%. Okay. Now one last thing over here. What if the consideration is payable in kind? Then what to do? You remember that I have told you this in what? While lottery also. In section 194B. That when you are paying the consideration in kind, then the payer cannot deduct TDS. Then the payer has to ensure that the other person has paid the tax. And then only release the consideration in kind. Otherwise, don't release the consideration in kind. You can do that also. Suppose if I am buying a cryptocurrency and I am giving you consideration in kind, then how will I deduct TDS from kind? You cannot deduct. Then in that case, your obligation is not to deduct. Your obligation is to only make sure that The other person has paid the tax. Just check this. It is exactly similar to 194B. Just check it once. So if the payment is made in kind, then you have to ensure that before releasing the consideration, you have to ensure that the tax required to be deducted has been paid in respect of such consideration by the other person. Okay. When it has to be considered, when the consideration is made in kind. If you are making the payment through bank account or through cash, then you have to deduct the TDS at the rate of 1%. The same is the case in lottery. When you give the lottery in kind, when you give the winning in kind, then you have to ensure that the other person has paid the tax. I have given you the example of what? That a person has won a car, etc., etc., etc. Okay. Now, sir, am I supposed to take TAN number to deduct TDS? There is no need to take TAN. There is no need to take TAN. TAN is relaxed over here. Relaxation has been given with respect to TAN number. TAN number has been relaxed to you. Don't worry about it. Okay. Secondly, there is no need for if the other person has not filed the ITR, then 206AB is also not applicable. Do you remember that in general, if the other person does not file the ITR of last year, then I am supposed to deduct the TDS at twice the rate or 5%, whichever is higher. Do you remember that? 206AB was there in TDS chapter. But that 206AB is not applicable for this section. 194S, 206AB is not. It means under this section, if the other person has not filed the ITR of last year, then also you will not deduct the TDS at twice the rate. You are not going to do that. Okay. So 206AB is not applicable. So there are two relaxations which are given over here. The first relaxation is what? The other person, the deductor is not liable to take TAN. First relaxation. Second relaxation. If the deductee has not filed the ITR of last year, still you will not double the rate of TDS. You will deduct the TDS at 1% only. Okay. Last but not least, some overlapping of some sections 194O and 194S. If there is an overlapping of two sections, then 194S shall prevail and 194O shall not prevail. It is 194S which is going to prevail and not 194O. Last but not least, this section is applicable from 1st of July 2022. Okay. So this is what this section is all about. This is what the BEAR Act talks about. This is exactly what is written in the BEAR Act. I have not done any change in this. Even in our textbook, it is the same thing, which is the ICI material. It is the same thing. So I am directly dealing from here only, not from the textbook. Okay. So now pay attention, please, all of you. Just go through it once, all of you, and then we'll move on to certain CBDT circular. A great circular is issued by CBDT explaining minute details about cryptocurrencies transactions. Okay, so there are a lot of clarifications which are required with respect to this provision. CBDT has come up with a great clarification. We'll talk about all of them one by one. Just go through this once and then we'll go ahead. Okay. Now there is one question which I would like to show you all, which is there in the question bank. If you come to question bank, page number 32.7 in your question bank, it's a beautiful question. Let me talk about that. Okay. It's a beautiful question which will clarify a lot of things for you all. Then we'll move on to that CBDT circular. Okay. Let's read this question. This question explains us what used to happen in the last year when this provision was not there and what is going to happen in the current year after the provision is introduced. X 54 years is a salaried employee, annual taxable salary 46 lakhs. He purchases and transfers the following cryptocurrency as an investor. So as an investor means his income will be charged under what? Capital gains. Now on May 1st, 2018, he has purchased some cryptocurrency of USDT, 2,40,000 quantity at 60 rupees. Okay. And then he transferred that in 2021, 70,000 and then 22, 30,000 and in 22-23, 1,40,000 at different rates. Then there are some expenses on transfer also. Then again in April 22, he purchased some NFTs and then he transferred that NFT in July 2022. Okay. So he purchased at 1400 and he sold at 1300. So there is a loss obviously. Apart from this, X annually contributes 1,50,000 towards recognized provident fund. Apart from the information given above, he has the following additional income. Long-term capital loss of 1,02,000 on transfer of residential house property on 31st March 2022. Business loss of previous year 22-23 from a new part-time business of trading in computer hardware 9,07,130. Now X wants to know the tax implication pertaining to the previous year 21-22 and 22-23. X wants to know certain tax implications. Okay. So now first of all, this is the year in which the provision of virtual digital asset was not there. So at that time we used to treat virtual digital asset like a normal capital asset. And we used to take all the deductions, all the benefits, everything. Now from this year onwards, we have to follow as per 115 BBH. So let's complete 2021-22 first of all. What has happened in 2021-22 first of all? You have purchased the asset in 2018 and you are selling in 21. So you are selling after 3 years and 6 months approximately. So this is long term. So this will be computed as per long term capital gains. 70,000 into 65 will be your sale consideration. Okay. Just check one by one. First of all, I will write salary. Then the expenditure on transfer is 5,000 rupees. And then index cost of acquisition will be 70,000 into 60 rupees will be the cost into cost inflation index of 21-22 divided by cost inflation index of 18-19. Okay. So there is a loss of 2,10,000 rupees over here. Okay. Okay. I hope it is clear. Now there is one more transfer which we have done in 21-22, that is of this 30,000 USDT. At what rate we have sold? We have sold at 80 rupees. Okay. 80 rupees we have sold. So 30,000 into 80, this will be your sale consideration. 3,000 will be your expenses on transfer. And then your cost of acquisition will be 30,000 into 60. 30,000 into 60 into cost inflation index of 2021-22 divided by 18-19. There is a long-term capital gain. So last year there was nothing like that. You cannot set off the loss. So the loss of virtual digital asset cannot be set off. That has come from the current year. It was not there in the last year. So last year we could easily set off this against this. Okay, there is no issue in this. So apart from that, we also have a loss of transfer of residential house property 1,02,000. So my net capital gains will be 359 positive minus 2,10,000. This one I will reduce because last year there was no restriction. Restriction has been imposed in the current year in Finance Act 22. And 1,02,000 is the loss of what? Of my residential house property. Now business loss, I have to leave it because business loss cannot be set off against capital gains. Okay. Business loss is there how much? Business loss is there in anyways in the next year. It is not there in the current year. It is there in 22-23. Now this is the salary and this is your capital gains net income. After that you can take deduction of ATC 1,50,000 rupees. Okay. And then you have to pay tax on 44,97,140 rupees. Okay. Now how will you pay tax? Out of this 44,97,140, 47,143 which is long-term capital gains will be subject to 20% tax as you can see, and on balance you will apply your slab rates. Okay. You can just check the solution. I can just tell you the solution once more. This first one is long-term capital gains, so you are taking indexation. The second one is also long-term capital gains, you are taking indexation. And there is one more loss of house property. So one gain, two loss. The net is gain 47,143. This 47,143 will be subject to what? Will be subject to 20% tax. And on the balance income out of this, you will be applying the slab rates. Once you apply the slab rates, you will get this much tax as your final tax. Okay. Now, this is the year in which the cryptocurrency concept was not introduced by the government of India. Now, moving on to the next year, that is financial year 22-23. Now, what is happening in 22-23? First of all, I am selling this 1,40,000 USDT at how much? At 66. So let's see, first of all, 1,40,000 USDT at 66 will come to 92.40. Now, against that, there is some expenditure on transfer. Will I get the deduction of expenditure of transfer? The answer is no, because as per the new provision, you do not get any deduction except the cost of acquisition. Nothing will be allowed except the cost of acquisition. You can check over here. No deduction of any expenditure. Even expense on transfer will not be allowed. Only cost of acquisition will be allowed. Check. Therefore, here you are not going to get the deduction of what? Deduction of 90 to 40, deduction of expenditure on transfer also. Even indexation benefit is not available. That is also not given by the government. So 1,40,000 into 66. And what is the cost? 1,40,000 into 60. This will be long-term capital gains. 1,40,000 into 60. No indexation also. No indexation. Nothing will be allowed. Only the original cost of acquisition. Nothing else. So 8,40,000 is the gain. Okay. Now, there is one NFT we are selling. 600 NFT sold at 1,300. You are not going to get the deduction of what? Expenses. 600 into 30. 600 into 1,300. 600 into 1,300. 7,80,000. What is the cost? 600 into 1,400 is the cost. 600 into 1,400 is the cost. Indexation not available. This 60,000 is loss. What will happen with this loss? This loss will be lapsed forever. This loss is not allowed as a deduction. I'm sorry for that. This is what this provision is all about. This loss is also not allowed. This loss cannot be set off against your cryptos income also. It cannot be set off against salary income also. It cannot be set off against any income. Not allowed. Okay. Now what to do? What to do? 46 lakh salary? Yes. This business loss cannot be set off against salary. Not allowed. This other loss also cannot set off against what? Against crypto. Crypto income is directly taxable at 30%. So you have to carry forward this business loss to the next year. You cannot set off against salary first of all, because against salary it is not allowed only. That we have done in the chapter of set off and carry forward only. Against this income also it is not allowed, because against the crypto income no deduction shall be allowed. Check. No deduction in respect of any expenditure, allowance, set off of loss. Nothing will be allowed against crypto. Crypto will be flat taxable at 30%. Therefore 46 plus 840 comes to how much? 54. 54. But now we have to be very careful. On this 840 you have to take 30% tax. And on balance income you have to take normal tax, but you have to apply 10% surcharge. Why? Because your total income is greater than 50 lakh rupees. So you have to apply 10% surcharge over here. Check. You have to apply 10% surcharge because your total income is greater than what? 50 lakhs. In the previous case, the total income was less than 50 lakhs. Therefore, there was no surcharge. But now you have to apply surcharge also. It's a beautiful question. Must do before exam. Please, you have to do this question. Go through this question once if you want. And then we'll move ahead with the next part. Okay. Go through this question once, all of you. So now let's go ahead with a CBDT circular. Now that circular is where, first of all, try to find out that. Okay. That circular is there in a separate chapter. That is chapter number 76, page number 15. 76.15. Here I have put all the latest circulars which the CBDT has issued, so that you can pay special attention on those circulars during the exams and also while you are revising the subject. Now there are a lot of questions. There are around 6 to 7 FAQs which are raised over here through circular number 13/2022, page number 76.15, book number 2, page number 76.15, question number 1. Now to explain this question, it's a big question. The answer is very big. So I have to explain that with the help of some examples now. Now pay attention, please. Please pay absolute attention, all of you. Okay. Now how crypto runs. Suppose there is a buyer of a crypto. Now from where you will buy the cryptocurrency? Okay, from where you are going to buy? You are going to buy cryptocurrency through an exchange. There is one party who is an exchange. Now there is one more party who is called as broker. And there is one more party who is a seller, and that seller has to be resident if you want to deduct TDS. Okay. Now listen carefully. You need to understand the mode of transaction first of all. I can buy a cryptocurrency through an exchange directly or through an exchange indirectly through a broker. I can buy either through an exchange or either through a broker. Now the question is, the obligation of deducting TDS is on whom? Who will deduct TDS? Am I supposed to deduct TDS? Because when I will buy, I will give the money to the exchange. And then exchange will give the money to the seller through broker or directly to the seller. So there are multiple players over here. Who is liable to deduct TDS? It is under whose obligation to deduct TDS? First of all, keep your mind clear that I can buy the crypto through an exchange directly or through a broker. I can directly buy through an exchange also, or there might be an intermediary, that is broker, who is helping me to buy the crypto through an exchange. What is an exchange? Exchange is nothing but a stock market. It's kind of stock market. And who is a broker? Broker is like all those different kind of apps. Like CoinDCX is a broker. CoinDCX is a broker. Now who will deduct TDS? So that is a very big problem. So there are four players. First player, second player, third player. You need to have a lot of patience to understand this. And there is fourth player. How will I deduct the TDS? And even if I deduct the TDS, how will I come to know the PAN of the seller? I do not know the PAN of the seller, because when I buy a cryptocurrency through an exchange, through any website or through any app, I do not come to know who is selling me. I don't come to know who is selling me. So how will I come to know the PAN of that person? All these things are practical difficulties which are going to be removed through this circular. So the first question is about that only. Who is required to deduct tax? Who is required to deduct tax when the transfer of virtual digital asset is taking place on or through an exchange? So when you are buying through an exchange and the payment is made by the purchaser, that is me, to the exchange directly or through broker, and then from exchange it goes to the seller directly or through broker. Who is liable to deduct TDS? So I am making the payment through exchange, either directly or through a broker. And then exchange is making payment to the seller, either directly or through a broker, because seller might have also sold through a broker. Then who is liable to deduct TDS? So that is a big question over here. Am I liable to deduct TDS? Is exchange liable to deduct TDS? Is broker liable to deduct TDS? Who is liable to deduct TDS? Let's see the answer. If the transaction is taking place on, you have to be very patient. It's not that easy to understand. But the government has made a beautiful clarification. We should appreciate the way they have made the provision and the way they have clarified the things. If the transaction is taking place on or through an exchange, there is a possibility of tax deduction requirement under 194S of the Act at multiple stages. That is, I will deduct, even exchange will deduct, even broker will deduct, because everyone is paying to each other. I am paying broker, broker is paying exchange, exchange is paying to the seller. Who will deduct TDS? Hence, in order to remove difficulty for transactions taking place on or through an exchange, the following clarifications are issued by the government. So now they have classified all the discussions into two parts, part 1 and part 2. What is part 1? In case where the transfer of VDA takes place on or through an exchange and the VDA being transferred is owned by a person other than exchange. It means the virtual digital asset is not owned by the exchange, it is owned by some third party. So when you are coming into this case, listen carefully. The virtual digital asset is owned by whom? Is owned by some third party seller. The digital asset is not owned by the exchange. There is a possibility that the digital asset is owned by the exchange also. That is also a possibility. That will come in part 2. So now, here there is a buyer. We are the buyer. Okay. Here there is an exchange. There might be a broker in between. There might not be a broker in between. We will try to see both the possibilities. And here there is a seller who is resident, and seller is a different person. Say Mr. A. I am Mr. X. Okay. Now I can sell to the seller through an exchange and through a broker. And I can directly also sell to through an exchange. Now who is liable to deduct the TDS? Be very careful. In this case, the buyer would be crediting or making payment to the exchange directly or through a broker. So I will be making the payment to whom? Listen carefully, step by step. I will be making payment to the exchange either directly, or I will be making the payment to exchange through a broker indirectly. Right? So I can make directly the payment to the exchange, or I can make indirectly the payment to exchange. Okay. So am I supposed to deduct TDS? Just wait. The exchange then would be required to credit or make the payment to the owner of the VDA being transferred either directly or indirectly through a broker. Once the money has reached exchange, what exchange will do? Exchange will either directly make the payment to the seller, that is the owner, or exchange will indirectly make the payment to the seller, that is the owner. First of all, understand this particular scenario, that I can directly make the payment to exchange, or I can make indirectly the payment to broker, and then broker will make the payment to exchange. And then there is another possibility whereby once the money reaches the exchange will directly make the payment to the seller, or exchange will make the payment to broker and broker will make the payment to seller. In this entire transaction, the question is, who will deduct the TDS? Will I deduct? Will exchange deduct? If there is an involvement of broker, then broker will deduct. Who will deduct? Who will deduct TDS? Let's see. Let's read ahead. The exchange then would be required to credit or make the payment to the owner of virtual digital asset transferred either directly or through a broker. Okay. Now, since there are multiple players, to remove difficulty, it is clarified. So now the clarification is coming. So what is the difficulty? The difficulty is who will deduct TDS. There are multiple players. Buyer is the possible player who can deduct TDS. Exchange is the possible player who can deduct TDS. Broker is a possible player who can deduct TDS. Ultimately, who will deduct? Let's see. The tax may be deducted under 194S only by the exchange, which is crediting or making payment to the seller. So the tax may be deducted by whom? The tax may be deducted. The first point says that only by the exchange, which is crediting or making payment to the seller. In case where the broker owns the VDA, suppose the seller is what? The broker itself is the seller. Suppose. There is also a possibility, then also they have to deduct the TDS. Then also who will deduct TDS? The exchange. The primary responsibility is on the exchange. Now the seller can be a third person, the seller can be broker itself, right? The broker itself has sold to the buyer. So in either of the case, the TDS obligation is on the exchange. Be very careful. Okay, this is the first point which says In case where the broker owns the VDA, it is the broker who is the seller. Hence, the amount of consideration being credited or paid to the broker by the exchange is also subject to TDS. So, the primary responsibility over here, is exchange will deduct. You can write over here. Okay, the exchange will deduct. Now, point number 2, what does it say? Let's see that. In case where the credit or payment between the exchange and the seller is through a broker and the broker is not the seller. Now, if the credit is through a broker and the broker is not a seller, then what will happen? I will make the payment to broker, then broker will make the payment to exchange, exchange will make the payment to broker, and then broker will make the payment to what? The seller. So exchange will directly not make the payment to seller. Exchange will first make the payment to broker and then broker will make the payment to seller. Now there will be multiple players who will be liable to deduct TDS. So who will deduct? The responsibility to deduct TDS under section 194S of the Act shall be on both exchange and the broker. So in case the payment is made by exchange to the broker and then broker to the seller, then both are responsible as per this circular. But the government will give some kind of relaxation, don't worry. It doesn't make sense to deduct TDS twice. However, if there is a written agreement between the exchange and the broker that the broker shall be deducting tax on such credit or payment, then broker alone may deduct the tax under 194S of the Act. The exchange would be required to furnish a quarterly statement for all such transactions of the quarter on or before the due date prescribed under in the income tax rules. Now listen carefully. So if there is a written agreement between whom? The exchange and the broker, then the broker shall be deducting the TDS. Who will be deducting the TDS? The broker. So if there is a written agreement between both of them, between the exchange and the broker, if there is a written agreement, then the primary responsibility is of the broker, not of the exchange. Is it clear? So now, listen carefully once again. What does point number 1 says that? Point number 1 says that the exchange will deduct TDS. But if the exchange is making payment to broker and the broker is making payment to seller, then point number 2 will attract. Then if there is a written agreement between the exchange and the broker, then only broker will deduct. If there is no written agreement, then both have to deduct. Exchange has to deduct and even broker has to deduct. This is what point number 2 has to say. Just check it once. So this is what the first point is all about. What is the first point? I'll again explain you with the help of an example. There is a buyer. There is an exchange. There is a broker. And there is a seller. And the VDA is owned by a seller, not by exchange. Exchange does not own VDA. So if you are making the payment through broker or directly to exchange, and if the exchange is making the payment to seller, then exchange is liable to deduct TDS. If the broker itself is the seller, then also exchange is liable to deduct the TDS. But if exchange is making the payment to seller and then seller, if exchange is making the payment to broker and if the broker is making the payment to seller, then if there is a written agreement between both of them, then broker will deduct. If there is no written agreement, then both will deduct, both. I hope it is clear to all of you. Is it crystal clear to all of you? It's slightly complicated. You have to see this lecture at least twice to understand this complicated concept. I don't think so you should be having any problem. You will understand in one time, but if you see twice, you will be able to understand properly. Okay. Okay. Now let's move on to the second part of question number 1. Pay attention, please. The second part of the question number 1 is what? Let's read that. In case where the transfer of virtual digital asset takes place on or through an exchange and the VDA being transferred is owned by such exchange. So if the VDA is owned by exchange, then who is responsible for deducting TDS? Pay attention. Now there is a buyer over here. There is an exchange over here. And VDA is owned by the exchange. There might be a broker over here. So you can directly buy the VDA through an exchange, or you can indirectly buy a VDA through an exchange. Now there are no multiple players. There is only one player, that is buyer. Buyer has to deduct TDS, or the broker has to deduct TDS. Okay, there are no multiple players now. But the question is very simple. There might be a practical issue over here. And what is that practical issue? What is the practical difficulty? The practical difficulty, just think that you are opening your mobile phone and you are buying a VDA. You are buying a VDA. You are buying a virtue, you are buying Bitcoin. You are opening your mobile phone, you are opening Coin DCX, and you are buying what? You are buying a virtual digital asset like say Bitcoin. Now the question is, how will I come to know that that virtual digital asset is owned by the exchange? How will I come to know? How will I come to? I don't know who is the seller, na? I will not come to know. So in that case, how will I come to know that I am liable to deduct TDS? So in that case, the government has given a very simple solution, whereby the government has said that buyer and broker is not required to deduct tax. The exchange itself will pay tax and will file a statement that it has paid the tax. The moment exchange does that, the buyer and the broker is absolved from paying what? The TDS. Because the practical problem with me and even with the broker will not come to know that the exchange is owning that particular asset. Okay. So this is the second point which is mentioned over here. Let's read it very carefully. In this case, there are no multiple players. The buyer is required to deduct tax under 194S of the Act. However, there may be a practical issue, as the buyer may not know whether the VDA being transferred is owned by the exchange or not. I will not come to know whether it is owned by the exchange. If I have that knowledge that it is owned by the exchange, I will deduct TDS. Hence, there may be a genuine doubt in the mind of the buyer with regard to its responsibility to deduct TDS under 194S of the Act. This difficulty would also be there if the buyer is buying VDA from an exchange through a broker. Now, to remove this difficulty, it is clarified that while the primary responsibility to deduct tax under the Act in this case remains with the buyer or his broker, as an alternative, listen carefully, as an alternative, the exchange may enter into a written agreement with buyer or his broker that in regard to all such transactions, the exchange would be paying the tax on or before the due date for that quarter. So if the exchange itself is paying the tax, you don't have to deduct the TDS. Okay. The exchange would be required to furnish a quarterly statement in Form 29QF for all such transactions of the quarter on or before the due date prescribed in the income tax rules. The exchange would also be required to furnish its income tax return, and all these transactions must be included in such return. If these conditions are complied with, the buyer or his broker will not be held as assessee in default under Section 201 of the Act for these transactions. Okay. If the asset, virtual digital asset, is owned by the exchange, the buyer and the broker can enter into an agreement with an exchange. An exchange will be liable to pay the tax, and then you will be absolved from paying what? Tax, and you will not be treated as assessee in default. Just go through this first question, a great question on virtual digital asset. So first question has two parts. First part is what? Where the asset is owned by some third person, not by exchange. And second part is what? Where the asset is owned by the exchange. So where the asset is owned by some third person, then who is liable to deduct TDS? Exchange. Exchange will deduct TDS of seller, and if the seller itself is the broker, exchange will deduct TDS of the broker. Okay. And the second part over here was what? In this also there were two parts, right? The second part over here was what? The exchange and broker can have a, where you are buying through what? Through a broker. Then you will make the payment to exchange, exchange will make the payment to broker, broker will make the payment to seller. There can be a written agreement between the seller, between the exchange and the broker will deduct the TDS. Now, where the VDA is owned itself by the exchange, then you are liable to deduct TDS as a primary responsibility. But If you or broker has a written agreement with the exchange, then exchange will pay the tax and accordingly file a quarterly statement. Okay, just check it once. So now let's move on to the next question, and the next question is very dangerous question. Let me read the next question. It's a small question of 3 lines. Can you see this? 2 line, 2.5 line, but the discussion is on another level. Let's see what is this question all about. Question number 1 was with respect to transactions where the consideration for transfer of VDA is not in kind. How will this operate in a situation where it is in kind or in exchange of another VDA? The problem over here is, listen carefully. Now this is a very dangerous question and the answer is also very dangerous. There is a buyer. There is a seller. Now if I am buying Bitcoin and paying rupees 1 lakh, then I can deduct 1% TDS. That is rupees 1000. Okay. Under section 194S. What if I am a buyer and here there is a seller and I am buying Bitcoin and in exchange I am giving Ethereum. So here the question is, we both are buyers now. Here the question is, we both are buyers. I am buying what? Bitcoin, but this seller is also buying Ethereum. So now the question is, the TDS obligation will come on both now. The TDS obligation will come on me also and on seller also, because seller is also a buyer of Ethereum. And I try to understand, because I am buying Bitcoin in kind. So he is also buying Ethereum in kind. And we have seen in 194S, if you are buying something in kind, you cannot deduct TDS. You have to ensure that the other person has paid the tax. Now both of them have to ensure. I have to ensure that he has paid the tax. He has to ensure that I have paid the tax. Now what to do in such case? Okay, it's a difficult task to answer, difficult question to answer. So let's answer this question very wisely, very patiently. Now there are a lot of things in this. Be very patient enough to understand this. As per the proviso to 194S of the Act, there could be a situation where the consideration is in kind or in exchange of another virtual digital asset, or partly in kind and cash is not sufficient to meet the TDS liability. In these situations, what happens? The payer, the buyer, has to ensure that the other person has paid the tax. The person responsible for paying such consideration is required to ensure that the tax required to be deducted has been paid in respect of such consideration before releasing the consideration. So I have to ensure that the other person has paid the tax. The other person has to ensure that I have paid the tax. In the above situation, the buyer will release the consideration in kind after the seller provides proof of payment of tax. Example, challan details. In such a situation where VDA A, that is virtual digital asset A, is being exchanged with another VDA B, both the persons are buyer as well as seller. Yes, I am also buyer, he is also buyer. I am also seller, he is also seller. One is buyer for A and seller for B, and another is buyer for B and seller for A. Thus, both need to pay tax with respect to transfer of VDA and show evidence to other so that VDA can be exchanged. We both are liable to deduct TDS. This would then be required to be reported in TDS statement along with challan number. This year Form 26Q has been included in provision for reporting such transaction, and for specified person. Who is specified person? I have told you. Individual HUF whose last year's turnover is less than 1 crore or less than 50 lakhs, as the case may be, is a specified person. Okay. So I hope you understood the first part of this particular discussion. That if I am buying Bitcoin, and if I am buying Bitcoin by giving Ethereum, then I am also buyer, the seller is also buyer. I am also seller, the buyer is also seller. We both have to deduct TDS. We both have to ensure that the other person has paid the tax. We cannot deduct TDS in case of kind. I have to ensure that the other person has paid the tax. I have to take challan from him and he has to take challan from me. Is it clear to everyone? So there is no issue till here. issue will come here. Where the issue will come, you know? The issue will come here where I am buying. Here there is a seller and here there is an exchange. We are not directly buying and selling, and I am buying Bitcoin by not paying money but by paying Ethereum, and he is taking what? Ethereum by giving what? Bitcoin. So in this case, if we are buying, if we are, listen carefully, if we are buying in kind through an exchange, then who will deduct TDS? What has to be done in that case? Who will deduct TDS? Pay absolute attention now. However, listen carefully now. If we buy directly, I am buyer, you are seller, you are giving me Ethereum, you are giving me Bitcoin, I am giving you Ethereum. I will make sure that you have paid the tax, you will make sure that I have paid the tax. And then we'll exchange the cryptocurrencies. But if I am buying through an exchange, you are also selling through an exchange, then what will be done? However, if the transaction is through an exchange, there is a practical issue in implementing this provision. In order to address this practical issue and to remove difficulty, it is clarified that in such a situation, as an alternative, tax may be deducted by exchange. In case we are buying in kind through an exchange, the tax will be deducted by the exchange. Such an alternative mechanism can be exercised by the exchange based on a written contractual agreement with the buyer and the seller. Therefore, now the exchange will have a contract with the buyer, will have a contract with the seller, and exchange will deduct TDS. Exchange will deduct TDS on Bitcoin. Exchange will deduct TDS on what? Ethereum. Be very careful. Here there is a buyer. Here there is a seller. And here there is an exchange. We'll take an example which is given in your circular. Okay. Now how this will be working? If such an alternative mechanism is exercised, the exchange would be required to deduct tax for both legs of the transaction. So exchange has to deduct tax on both the cases because both of them are buyer na. So both the cases he has to deduct tax and pay to the government. In form 26Q, it will, for this reason explained below, need to report it as tax deducted on both legs of the transaction. The buyer and the seller would not be independently required to follow the procedure prescribed in 194S. Then the buyer and the seller is what? Absolved from their liability. Now, how this will be done? That is also explained in great detail over here with the help of an example. I am explaining you with the help of example. When the exchange opt for deduction of tax under 194S of the Act, on such transaction, there is a possibility that the tax amount deducted is also in kind and needs to be converted in cash before it can be deposited with the government. How, sir? Listen carefully. Let me explain you. Pay attention, please. Suppose there are two cryptocurrencies. One is Monero. So I am buying Monero. And in exchange of Monero, I am giving what? Deso. These are cryptocurrencies. So he is selling Monero. And he is buying what? Deso. So listen carefully now. Listen carefully. Please pay absolute attention. How many Desos you are giving? I am giving 100 Desos. In exchange of that, I am getting 50 Moneros. I am giving 100 Desos. In exchange of that, I am getting 50 Moneros. Okay. So I am what? Buying Monero. And I am giving Deso. And I am buying Deso. And I am giving Monero. Now exchange has to do what? Exchange has to deduct 1% tax. Listen how. When exchange will give Monero to buyer, exchange will deduct 1% of this Monero, and exchange will deduct 0.5. Listen carefully, 0.5 Monero, and will give how much? Will give 49.5 Monero to the buyer. And as against here, the exchange will deduct again 1% deso. That is 1% is how much? That is 1 deso. And will give how many desos? Will give 99 deso. To whom? To the seller. Now what exchange has? Listen carefully. It's a complicated thing. It's not that easy to explain for me also. Now what exchange has deducted? Exchange has deducted 0.5 Monero and 1 deso. Obviously exchange has to pay this to the government of India because he has deducted the tax in kind. Now when he will go to pay this to the government of India, when exchange will go this to pay to the government, will government of India accept Monero and deso? They want rupees. He has to convert that into rupees. So this is the challenge that he has to face now. Let's see. This is what it is explained so beautifully in this circular. At the time of transaction, the exchange will deduct TDS in pair being traded. For example, in case of trade for Monero to deso, 1% of Monero and 1% of deso will be deducted as tax under 194S by the exchange, and balance shall be transferred to the customer. So out of 50, we are deducting 0.5 and giving 49.5, and out of 100, the exchange is deducting 1 and giving 99 to the customer. The trail of the transaction evidencing deduction of 1% of consideration for every VDA to VDA trade shall be maintained by the exchange. The exchange has to maintain all those details. Now, exchange shall immediately execute a market order. Now, what exchange will do? This Monero and deso are hopeless currencies. Exchange will do what? You know, will immediately sell 0.5 Monero and 1 deso and convert that into a primary virtual digital asset. Which is a primary virtual digital asset? Like Bitcoin. It will immediately convert that into a primary virtual digital asset. Immediately. If this exchange which we are doing is not Monero and deso, it is Bitcoin on Ethereum, then it does not want to change, convert that, because the Bitcoin itself is a primary virtual digital asset. But if the cryptocurrency which we are exchanging is not a primary, now what he has deducted? He has deducted 0.5 Monero and 1 deso. These are hopeless currencies. Immediately convert that into what? Primary virtual digital asset. This is what it is written over here. Check. The exchange shall immediately execute a market order for converting this tax deducted in kind, 1% Monero, 1% deso, to one of the primary VDA like Bitcoin, Ethereum, USDT, USDC. These are primary, these are very famous cryptocurrencies which can be easily converted into INR. Now, this step shall ensure that the tax deducted under 194S of the Act in the form of non-primary VDA like deso, Monero is converted into an equivalent of primary VDA which have a ready market in India, ready INR market. Because in India, what happens? Deso, Monero, all these hopeless currency does not have a direct conversion to INR. You cannot directly convert into INR. So convert immediately sell these hopeless currencies into what? Into a primary VDA. Timestamps of the timing orders to be maintained to ensure such conversion of VDA withheld to be done immediately by the exchange. If the taxes are withheld in primary VDA, this step should be ignored. This is a very important line. If the taxes are withheld in primary VDA, it means if you are giving Bitcoin and taking Ethereum, then you will deduct Bitcoin and Ethereum. In that case, you don't have to convert because your taxes are withheld in the primary VDA. So you don't have to exchange. You don't have to exchange that into INR. Okay. So the exchange has to do this for the entire day. Now what does exchange has? Tell me, what does exchange has now? Now exchange has what? Bitcoin in exchange of Monero and Deso. Now what will exchange do after this? So now the exchange has what? Exchange has the Bitcoin now. Now what will they do with the Bitcoin? Obviously, they cannot give Bitcoin to the government now. So first of all, you have to convert your non-primary VDA into a primary VDA Bitcoin. Now what has to be done after that? Let's see. Let's see. All the tax deducted under section 194S of the Act in the form of primary VDAs. Now what is the primary VDA? We have Bitcoin, or converted into primary VDA under step 2 will be accumulated for the day. So the exchange has to accumulate all the taxes for the day. All the taxes for the day. The time limit will be from 00, that is from midnight 12 o'clock to 11:59 in the night. The VDA accumulation by the exchange shall be verifiable from the trail of the orders of VDA to VDA orders executed during the day. Now the accumulated balance of the VDA at 12 hours will be converted into INR based on the market rate existing at that time. Now at the time, after the entire day is completed, the accumulated primary VDA, in our case it is Bitcoin, will be converted at 0000 into what? INR. As per what rate? As per the rate prevailing at night. Because you might be knowing that the cryptocurrency market is available 24/7. It is not like stock market which gets closed at 3:30 in the evening and which is closed on Saturday, Sunday, and which is closed on certain public holidays as well. Crypto market is available 24/7. So there is no issue of conversion at any moment. So let me explain you the entire scenario how it will go. Please pay attention. The buyer is buying Monero and giving Deso. The seller is giving Monero, taking Deso. It is the duty of the exchange to deduct TDS. Now the exchange will deduct TDS in what? In kind. It will deduct 1% of 50 Monero, which will come to 0.5 Monero. It will also deduct 1% of 100 Deso, which will come to what? 1 Deso. Now the exchange has what? Exchange has 0.5 Monero and 1 Deso. Immediately, the moment they will deduct this, immediately they will convert this into what? Primary VDA. Now, once primary VDA is converted, say Bitcoin or Ethereum, at the midnight, at 12 o'clock in the night, whatever they have deducted in the entire day, they will accumulate that and they will convert that into INR in the midnight. This is how the procedure will be going on. Let's see. In order to bring consistency and to avoid discretion, the exchanges are required to place market order at 12 hours for the tax withheld or converted under step 2 in the form of primary VDA for conversion into INR. This sell market order shall be executed based on the open buy orders in the market. Price and the quantity data for every match trade shall be maintained by the exchange and shall be available for verification. It shall be verifiable from the system coding that conversion into INR happened at the first available buy order based on the prevailing buy order book of the respective exchange and at the time of conversion. As a practice, the respective exchange liquidating the VDA shall be prohibited to be a buyer for these VDAs. The customers will be issued a contract note. Obviously, the respective customers will be given the contract note for the respective crypto which they have bought, or over email, which will include the amount of tax withheld in kind and the amount of INR realized from such tax withheld. The tax withheld in kind and converted into INR by following the above procedure shall be deposited in government account as per the time limit, that is by 7th of the following month, and so on and so forth. Now this is one last clarification. One last clarification is also very important. Your mind and my mind will not work only, but department is very proactive. It is clarified that there would not be any further TDS for converting the tax withheld in kind in the form of VDA into INR or from one VDA to another and then into INR. Otherwise, you will say that you are converting a VDA into an INR. You are converting Bitcoin into INR. So for that conversion also you should deduct TDS. So the government has clarified that on that conversion there is no need to deduct any TDS. Otherwise, there can be a TDS implication on that conversion also. So on that conversion, there is no need to deduct any TDS. So this is what this entire procedure is all about. So how it will be deducted? The exchange is responsible for deducting in kind. Once they deduct, immediately, suppose I deduct, I am giving you 50 Monero. I will deduct 1% right now and I will convert into primary VDA. And then at the night at 12 o'clock, I will convert that into INR and I will pay to the government of India. So this is how it will run. And this is what this question number 2, the great question, is all about. Just go through it and then we'll move on to the next questions. And the next questions are very easy to understand. The question number 3 is again another clarification. What does it say? Suppose if I am a buyer and you are a seller, and if I am buying a VDA, the question over here is, listen carefully. Such kind of great provisions have been made by the government of India. There is a buyer over here. There is a seller over here. And the buyer is buying a VDA. The question is, the buyer is liable to deduct TDS under 194S. Right? The question is VDA goods or not? Goods or not? If VDA is a good, then the provision of 194Q can also get attracted. Do you remember, if your last year turnover is more than 10 crore and if you purchase more than 50 lakhs of goods, then you are liable to deduct TDS at the rate of 0.1% in excess of 50 lakhs when you buy some goods from someone. So the question over here is VDA goods or not? So the government has clarified that. The government is saying that right now we are not interested in identifying whether it is goods or not, but the government is saying that once the TDS is deducted under 194S, tax would not be required to be deducted under 194Q. There is no need to deduct any tax under 194Q. Once the TDS is deducted under 194S, without going into the merit whether VDA is a good or not, we are not getting into that discussion. The government is saying we are not interested in the discussion only whether the VDA is a goods or whether VDA is not a goods. We are not interested in that. Irrespective of that, we are not interested in whether VDA is a goods or not. Once you have deducted the TDS under 194S, you are not supposed to deduct TDS under 194Q. Moral of the story is very simple. 194S will prevail over 194Q. That's it. There is no need to further make any kind of argument on that. Just check it once. Okay. Question number 4. As I have said you, only question number 1 and 2 is very important. Question number 2, 3, 4, 5, 6, very simple. Next question, whether the consideration for transfer of VDA shall be on gross basis after including GST or commission, or it shall be on net basis after exclusion of these items. The government has said that it should be on net basis after excluding GST or charges levied by deductor for rendering services. So you have to deduct TDS on net amount and not on what? Not on the gross amount. Okay. You have to exclude GST, you have to exclude the commission, etc. And you have to deduct TDS on the net amount, not on the gross amount. Just check it once. Okay. Okay, question number 5 is something which we have done earlier long back in TDS also. So this is a similar clarification. Let me give you an example for the same. Suppose I am a buyer, Mr. A is a buyer. Okay. And there is a seller, Mr. X. And I am making the payment. Okay. I am making the payment to Mr. X's seller. Through what? Through Razor Pay. And what is Razor Pay? Razor Pay is a payment gateway. Okay. What happens? In practical life, I will make the payment to Razor Pay and Razor Pay will make the payment to Mr. X. So now the question is Razor Pay liable to deduct TDS? Is the payment gateway also liable to deduct TDS? The government has given a clarification. If the buyer has deducted the TDS, then there is no need for the payment gateway to deduct TDS once again. So the obligation is on the buyer. Once the buyer has deducted the TDS, Razor Pay need not have to deduct TDS once again. Okay, check it once. In the transactions where the payment is being carried out through payment gateways, there may be deduction twice. To illustrate that a person XYZ is a buyer, XYZ is Mr. A, is required to make payment to the seller for transfer of EDA. Okay. He makes payment of 1 lakh rupees through digital platform of ABC. Now ABC is razor pay. On these facts, liability to deduct tax under 194S of the Act may fall on both XYZ, who is the buyer, and ABC, who is a payment gateway. Is tax required to be deducted by both? So the department has said that answer is no. It is provided that in the above example, the payment gateway will not be, the payment gateway razor pay is not liable to deduct TDS. Will not be required to deduct tax under 194S of the Act on a transaction if the tax has been deducted by the person XYZ. If the buyer has deducted the tax, payment gateway is not required to deduct tax. Okay. Is not required to is required to make deduction under 194. Hence, in the above example, if the buyer has deducted TDS under 194S or 1 lakh rupees, ABC will not be required to deduct TDS under 194S of the Act on the same transaction. To facilitate proper implementation, ABC, who is ABC? ABC is the razor pay, is the payment gateway, may take an undertaking from the XYZ regarding tax deduction. So, razor pay will take an undertaking from Mr. A that you have deducted the TDS, please give me an undertaking so that I am not liable to deduct TDS. What if the buyer does not deduct? If the buyer does not deduct, then razor pay is liable to deduct the TDS. Okay. The indirect interpretation of that provision is this only. Okay. Now, you remember there is a threshold of 50,000 rupees and there is a threshold of 10,000 rupees in some cases. You remember that in 194S? Now, how to apply that threshold? Because the section is not applicable from 1st April, it is applicable from 1st July. Now listen carefully. Because the section is applicable from 1st July, listen carefully. Pay attention please. 1st July 2022, the section is applicable from this date. So till 30th June 2022, the section was not applicable. Okay. So from 1st April 2022 till 30th June, if you have made any payment, then no TDS, then no TDS, no TDS. But to identify whether it crosses 50,000 or whether it crosses 10,000, you have to consider the payments which are made before 30th June also. For example, if you have made a payment of, there is a buyer Mr. A who has made a payment of 30,000 rupees, no TDS. Now the buyer has made a payment of another 30,000. Now the question is to identify whether 50,000 crosses or not. You have to take both. And then once both are considered, you have to deduct TDS only in excess of 50,000 rupees. So you will deduct TDS on how much? On 10,000 rupees. Okay. So to identify whether 50,000 crosses or not, or 10,000 crosses or not, you are supposed to consider this threshold also. This is what the last question is all about. Section 194S came into force from 1st July 2022. The liability to deduct tax under 194S of the Act applies only when the value or aggregate of the value of consideration for the transfer of ED exceeds 50,000 during the financial year. In case of consideration paid by a specified person and 10,000 rupees, in other cases, it is not clear how this limit of 50,000 or 10,000 is to be computed. So, since the threshold of 50,000 is with respect to a financial year, the threshold is with respect to a financial year, calculation of consideration for transfer of VDA triggering deduction under 194S of the Act shall be counted from 1st April. Hence, if the value or the aggregate of the value of the consideration for transfer of VDA payable by a person exceeds 50,000 or 10,000 during the financial year, including the period up to 30th June, the provision of 194S of the Act apply on any sum representing consideration for transfer of VDA credited or paid on or after 1st July 2022. Since the provision of 194S of the Act applies at the time of credit or payment, whichever is earlier, representing consideration for transfer of VDA, such sum which has been credited or paid before 1st July would not be subject to TDS. So, if the credit or payment, either of the activity is happening before July, then TDS will not be applicable. So let me give you an example now over here. Suppose in our case the threshold is 50,000. Okay, we have to consider one of the threshold here. Suppose the threshold in our case is 50,000. Okay. Now this is till 30th June 2022 and from 1st July 2022. Okay. Case 1. Now suppose you paid 40,000. No TDS. Now you paid another 5,000. No TDS. Because the threshold does not exceed 50,000. Okay. Second case. Suppose you paid 70,000. No TDS. Now suppose you paid 10,000. So to compute the threshold, you have to count both. But the TDS of one person will be only on the payment which is made after July. That is TDS on only 10,000. On this amount, TDS cannot be charged. But to compute threshold, you have to consider both. Third, suppose you paid 45,000. And then you paid what? 25,000. So now to compute the threshold, you will consider both. But the TDS at the rate of 1%, okay, will be only on 20,000 rupees. Okay, I hope it is clear to all of you. You can take a photograph of this, and this completes this very important topic which is there for your exam. Very important topic. Take a photograph of this, and then we'll end the lecture here.